Hey guys, welcome back to a video. Today we're going to be going over something very important for Polarity ATI, so stick around for the video. We're going over fair value gaps and how you can use fair value gaps properly and with Polarity ATI. Okay, I know a lot of people are suspicious about counter settings. I'm going to give you a solid plan for using Polarity ATI. Okay, this is today, August 22nd. And we're just going to be going over the day. Okay, so I did take a loss today, a very small loss. That's perfectly fine because my winners are way bigger. So going over today. So what is a fair value gap? Let's start with that. A fair value gap is basically just big displacement in the market. And it is going to be a 3-candle formation. So you can see we have 1, 2, 3. Middle candle is a big displacement. And ideally, all 3 candles are pretty bearish. Okay, so this one kind of bearish, big sell wick. The bottom candle not really, middle candle big sell off. Okay, the way you chart this is you look for gaps between the first candle's wick and the third candle's wick. So you see how there's a gap between this wick and this wick. Okay, so that's a fair value gap. Next thing, I mean that's basically what a fair value gap is. If we look over on a bullish side, this is a pretty good 3-candle bullish pattern, right? Fair value gap is going to be from this wick to this wick. Okay, it's the gap in between those. Okay, you can see this one didn't end up working out, and I'll talk more about how you can play those in another video. But I guess we did bounce out for a couple points, but nothing crazy. Okay, but how can you use this? Okay, how can you use this? So first off, that's a fair value gap. Okay. Which fair value gaps work the best is going to be fair value gaps with breaks of structure or market structure shifts, whatever you want to call them. Okay. So let me bring this. Okay. So what is a break of structure or market structure shift? It's going to be your most recent swing low. Okay. So technically right here is your most recent swing low on this bearish move. Okay, which is just a change in the market state. You can see we have an uptrend right here with higher highs and higher lows, as you can see, right? Higher highs, higher lows, and then we break that. We're not making higher lows anymore. We're moving down. We're starting a downtrend, right? It'd be the opposite to the upside. So right here, we're in a downtrend, right? Lower lows, lower highs, and we break. You need to have a candle close above. So your most recent swing high is right here, right? And we had market structure shift, break of structure, whatever you want to call it, right? Candle close above, and we had a fair value gap that formed there as well. Didn't end up respecting it at all, but that is what a break structure is. Okay. And now, which ones work the best? It's going to be obvious. I just said this. Ones with breaks of structure. And you can see here, this is a nice play happened at 10:20 this morning. Had a break of structure, big displacement candle. You want to see a big candle, okay? You know, you're going to see ones like this. This is a little fair value gap right here, and they'll work. They will work, but you want to see a break of structure as you're forming that fair value gap. So this didn't have a break of structure until this candle closed, which had a little fair value gap here. And we did kind of hold that, right? You want to look at these for scalps, right? How can you play these? So looking at this play, we had the break structure, big displacement candle. You want to see a big displacement candle. And then price is going to want to return into this to, you know, fill back up what a lot of people missed, basically, okay? People are going to want, they're going to see this, right? And there was not tons of trades that people caught in here because it's just such a quick dump. So people want to get back in for the downside in this gap. So how can you play this? You can look to arm regression long into this. Okay, so you see this happen. We pull up towards it. You arm regression long, hoping for a fill. And Q, you most likely would get fills. ES maybe not as much. Or you can manually enter off of these too. Okay, but this one worked out well. We ended up dropping pretty heavily after that. Okay. Even here, we had a small swing low here, but we are in a downtrend, so not really a great play there. But we do have a 3 candle bearish pattern, big displacement candle in the middle. Okay. And we end up returning to it, respecting it. All right. If you could arm regression long, get a play. Move down, move up, regression long, get a play. Move up, regression long, get a play. And obviously, the more times we test a level, the less likely that it's going to work. Okay. Yeah, the best plays are going to be ones with fair value gaps that have break of structures with them. So this is a break of structure. Okay. If we keep fast forwarding into the day, you can see, let's look here. Okay, big reversal, right? We had a swing high right here. Break of structure right there. Okay, recent swing high. We had a bullish move. And what forms? Fair value gap. A perfect fair value gap, okay? And these will form on other time frames too. Okay, it's not just going to be a 1 minute fair value gap. There's 2 minute, 3 minute, 5 minute, 15 minute, 30 minute, hourly, whatever you want. Okay. This is a nice example again. Break of structure here. Fair value gap formed. Very nice bullish candles. You want to see those very nice bullish candles. Okay, you can look for a regression short play into these or trend longs. Or you could look for manual entry, something like this. Put it under the recent swing low. Go for a 2-to-1 trade. And you hit it in like 2 minutes, 3 minutes. Got 6.5, 7 points. All right. And then let's see. Right here, we have the next big trade, which just happens to be basically the next trade. We had a break of structure here because we had a swing low and an uptrend, right? Swing low, and we break that. And we had a fair value gap form here, right? When do we come up into that? Right here, right? Next time we come into that, again, you can look for manual trade, something along the lines of this, target 2-to-1. It wouldn't necessarily hit that. It really depends on where your stop loss is, right? Some people put it above fair value gap. Some people put above the high of the move of the 3 candle formation. Either way, you could have gotten 6, 7, 8 points out of that on it. And if you're using polarity, you could have definitely armed a regression long here or trend short and gotten a play. Okay. Next time we came into it, you might have taken a loser. But you can see if we break above a fair value gap with a lot of momentum, I'll talk about this in another video, can act as support. Okay, as seen right there. Let's find another one here. Okay, one more example for you. So we had towards the end of the day here, swing low, right? It's just a swing low, swing high. It's like 3 candles. The middle candle needs to be the low or the high. Okay, so right there is going to be your break structure. Okay, and then what else forms? We have 3 candle formation here. There we go, or one right here as well. Depends which one do you want it to use. Doesn't really matter. Usually the one that forms with the break of structure works best, right? Either way, you could look to arm regression long in here to get that short entry. You could look for those manual entries like this. Okay, these are trades I like to take as manual entries a lot of times. I do use polarity like this on occasion, good occasion, but yeah, I like manual entries. You just got more control most of the time. But I only trade from about 9:30 to 11. So yeah, but that is all I got for this video. Hope you guys enjoyed, and I will see you guys.